I've been investing for over 12 years now, and today I'm gonna break down all of my investment accounts, showing you what's in them, how much I've contributed, how much they've gained, and talk about my investment philosophy. And by the way, this isn't something my finance degree taught me. It's actually something I learned from years of experience investing myself and studying all the top investors in the world. Now, before we get into it, take 2 seconds, hit like and subscribe. It really helps push this video out to more people, but let's go. So my very first experience investing was when I turned 17 years old, and I had asked my parents if I could meet their financial advisor to talk to him about stocks, because I knew I always wanted to be an investor and I knew I wanted to put money in the stock market, and I had saved up some at the time. And so they introduced me to their financial advisor, and I asked him pretty much the most basic question that you can ask somebody is, what is a stock? And by the end of the conversation, we basically landed on, well, he suggested that I buy a mutual fund, and it was a Ben Franklin something mutual fund. It was pretty much, now looking back at it, I think it was a bond fund that he had me buy, because I put $1,500 in it and it went basically sideways for something like 3 years. So that was my first exposure to investing. And from then I graduated onto trading penny stocks. And so I found this guy, actually, here, check this out. I found this dude named Timothy Sykes, and I bought this course called How to Make Millions. I don't know if the camera can see that. How to Make Millions by Tim Sykes, and it costed me something like, I don't know, $500 when I was early college, late high school. I was making minimum wage, so $500 was a lot for me at the time, and I watched all of those DVDs in there. And so that kind of taught me that trading penny stocks is super risky, and it's hard to do really any type of day trading and be successful at it. Plus, I didn't really stick with it that long, and I'm not sure that course is really good, and so take with it what you will, but it was my first exposure to buying a full-blown course, spending my money on something that I wanted to increase my knowledge with and help me make more money later. Anyway, fast forward from there, and I actually went to college to get a finance degree. I remember when I signed up and I looked at all of the business degrees that paid the most, and finance was at the top of the list, and so I thought, guess I'm doing finance. And I actually took some classes that taught me a decent amount of finance. So I took economics, accounting, corporate finance, a couple other random ones. And then my favorite one was the futures and options trading class. And that kind of led me down a whole new path to something that I still do to this day, which you'll see a little bit later in this video, and that's trading options. But what I learned in college wasn't completely enough. I wanted to supplement that knowledge with people who had actually done it from a professional standpoint. And so I bought a course that was something like $5,000. I did this a couple years ago from some guys from Goldman Sachs and Bank of America. They've traded options for a long time. And so that taught me everything I need to know about how to look at the economy, how to look at different industries and sectors down to the best stocks, and then how to trade options on those based around earnings and all these different things. And so that was a really cool experience to be spending more money to help increase my knowledge in something that I really enjoy. And at the same time, I've been reading a ton of investing books from greats like, let's see here, Peter Lynch, One Up on Wall Street. This one's really great. Ben Graham, Intelligent Investor. This is probably on everybody's, top 5 list for long-term investing. Howard Marks, The Most Important Thing. And then Poor Charlie's Almanac for everything Charlie Munger has talked about and kind of thought about. It's all kind of his philosophy on investing and life in this book. So those are just some of the top investors that I think everybody should read if they're interested in investing. But those ones have really helped me go from a complete beginner to knowing quite a bit about investing, at least a lot more than the average person. And I just find it interesting too. Okay, on to the good stuff. The past 5 years is really where my investing journey has taken off, because I started to get a very regular income from a good salary as a data analyst. And so I want to show you everything that I have in all of my accounts and be fully transparent, because I think this stuff's cool. And we're going to start with my Roth IRA. All right, looking at my Roth IRA, I'm just going to walk through each position that I have and then kind of talk about why I bought it, what I'm doing with it, and then how much it's made so far. Starting off with Berkshire Hathaway, obviously Warren Buffett's the GOAT. This is taking up 18% of my portfolio right now, and I'm okay with that because they've had an insane track record for something like 50 years. I don't think they're going away anytime soon, and so I don't think I ever want this getting above 25% of my portfolio, something like that, but I'm okay with this being the top one. And obviously right now it's made 12.84%. It's one of my best positions, and it actually holds the biggest weighting in my portfolio. After that is a India Internet ETF. This is INQQ. I'm gonna make a whole video on India and why I think they're gonna be the next US at some point. I think over the next 30, 40 years, they're gonna absolutely crush. I wanna take advantage of that right now and buy in while India is still small from a GDP perspective, I think there's something like 3.6 trillion dollars GDP. And so I think they just have loads of potential. This takes up 15% of my portfolio, so another pretty big chunk. I'm sure I will trim this down overall as it continues to grow over time. Right now it's down 7%. Just a couple weeks ago, it was up like 16%. And so this one's gonna be a little bit more volatile, but I'm okay with that right now because I plan on holding this for the next 20, 30 years. Next up is the king of dividends itself. This one takes up 11% of my portfolio. It is up 3% total, which is great. I recently just started buying this not too long ago, and so I'm okay with it being up just a little bit compared to the rest of my portfolio right now. Stock market's not doing so hot in the beginning of 2025, and that's not really a big deal because again, all of these are very long-term investments. I also have VONG. This one, I just wanted some exposure to the Russell 1000 and I wanted some growth in there. You'll see a pattern in all of my investments. I go heavy on the growth side because I have a lot of time ahead of me and I really want to make more than just 7%, which is the average return of the stock market, inflation adjusted. So I have some VONG in there, 10% of my portfolio. I might cut this back a little bit, but that's it for now. It's down 7.3% or 83% right now. I have some NASDAQ exposure, QQQM, nothing special here, down 1.47%. That takes up of my portfolio. Amazon, I started buying this just a couple months ago. I think Amazon is still, I think they're fairly valued at, roughly $200 per share. If they continue to drop lower, that's great. I'm just gonna keep buying up more shares as they get cheaper. I think they still have a very long runway in terms of what this company can do and the growth that they have, or at least the growth potential. I have Tesla in the portfolio. Just a couple weeks ago, this was 59% of my portfolio. I sold off something like $3,000 or $4,000 worth and then rebalanced everything when I sold that because Tesla had run up from 160 mid last year all the way up to $488 was the 52-week high. And so I sold at about $417. It's now down to $262, so that was a good choice to trim that back a little bit. What I have left is still up 23%, which is really great. I know a lot of people hate on Tesla when they're doing poorly, and then they love Tesla when it's doing great, so whatever. We're gonna leave that in there. Another growth fund. These are probably a little bit redundant, some of these, like VONG and SCHG and QQQ even, they have a lot of overlap. And so I may just kind of simplify this at some point, but for now, this is 7% of my portfolio. It's down 8% so far. And again, I think I bought this a little bit earlier this year in 2025. I'm okay with it being down. I'm gonna keep buying this as it gets cheaper. And then the last one is Celsius. A lot of people don't know this, but Monster, the energy drink Monster, it's been one of the best stocks of all time. It's in the 100 bagger list. It absolutely crushes. They have incredible margins. They've just been a fantastic company. I think Celsius has the potential to be the next Monster, or at least something similar. They had a huge run up since 2019, all the way up to $100 a share. When they dropped down to about 50, I bought quite a bit. And then in my IRA here, I bought more when it was at 37, right? Around $38 a share. So it's at 27 right now. I'm down 27%, but I still think that they have a lot of long-term growth, and I think they have a lot of potential. They just bought Alani Nu, the other energy drink company that's growing really quickly, and that can help add to their revenue and their, kind of strengthen their balance sheet a bit. So I'm gonna hold on to this one for now. I still think they have a lot of potential, and I'm curious to see how they're gonna do the rest of 2025 and in the next few years. I still have some cash sitting in here that I need to put into some of these. And then I have Mercado Libre. This is basically the Amazon of South America. Very small, 2% in my portfolio. I don't even have close to a full share, only $350 in there, but it's up 8%. Our Amazon isn't doing as good, but other Amazons of the world are doing fine. This is just a little bit of kind of a play position. I'm not really super serious about this one, but I'm glad that it's up 8%. So overall, I've contributed about $12,000 to my IRA. It's now sitting at $15,542. And that's a gain of about 27% over the past roughly 2 years since I started contributing to this. So I'm happy with that. But let's move on to my next account that I have, which is a just taxable brokerage account with Charles Schwab. All right, so here's my taxable brokerage account. I'm just gonna go from top to bottom. This one's, fairly simple, but there's some things that I do wanna talk about here as far as mistakes that I've made. So first of all, it has about $31,000 in the account itself. I've got $5,800 sitting in cash right now. $25,000 in the actual market. So let's start with Celsius. So I just mentioned that I really like Celsius. I think they could do well over the next few years. I would love to see them do something similar to what Monster has done over the past couple decades. One mistake that I made here, which cost me, as you see, $8,500, is that I went in way too heavy at the exact wrong time. And so middle of 2024, Celsius had gone to 99, then down to 60, then 99 again. It had dropped down to 60 again. I figured it's probably gonna bounce around in this range for a while. And so I sold 4 puts at $50 per share, roughly $50 per share. And Celsius just kept going down. So they had quite a few things go wrong last year. And I just kind of quadrupled down on what I had normally been doing. I had only been selling 1 put every single week on Celsius at the time. I thought, you know what, I can make more money if I sell 4 puts. Bad idea. And I was assigned those puts, assigned 400 shares. As we see, the price is at 27. It's not at 50 anymore. So I basically lost, you know, roughly half the position so far. I still think that Celsius is a really good company. The fundamentals are not deteriorating at all. In fact, they're actually improving. They're selling more and more, and they're actually expanding globally. And again, they just bought Alani Nu, and so I'm gonna hold on to these shares, but this is a huge learning point for me. This is a really good lesson to learn, of reminding myself, if I'm gonna trade options, do not go way too heavy in any single position. That's good advice for, you know, investing in general. I also have a bunch of shares of QQQ. I have 11 grand in there that I bought it for. On average, it's up to almost $15,000 for a total gain of 3,600. Happy to see that. I'm fine holding these shares for a really long time because I don't have any other stocks to necessarily put a lot of money into right now. I haven't done enough research on a single company yet to move this money elsewhere. And so for now, it just sits in an index fund. And then I have some options that I've played with over the past couple weeks. I'm not going too heavy into option selling right now, just because I have a lot of other things going on. If all of these go well, I'll make 110 bucks over a couple of weeks. If not, really not a big deal at all, but I just wanted to kind of keep the momentum going. Sell a little bit of options here and there when I have more time later on, and when I want to really prioritize this, I will add more to these positions. But for now, these are just very small positions to make a few extra bucks. Moving on to my 401k, this is the biggest account by far. This one I absolutely love because it's in the green everywhere that you look, and it's also the simplest. Maybe there's a lesson there. It has 2 funds in it. This is the Fidelity Growth Fund, ticker symbol FDGRX, and really this is just a large cap growth fund. It's up 48% overall, which is fantastic. I got $80,000 in it. It takes up 72% of my portfolio, and then the other 27% is just an S&P 500 index fund, basically BlackRock Equity Index. I think technically these are mutual funds, but this one's up 38%. I just keep pouring money into this thing every single paycheck. I increased it recently from 10% of my paycheck to 15, and then my company matches 10 for a total of 25%, which is pretty awesome. But that's where my 401k is at right now. In total, between my IRA, my 401k, and my taxable brokerage account, I have $157,000, $160,000, somewhere in that range. I'll have the number up on the screen. But that'll just continue to grow because I'm not gonna stop investing anytime soon. The goal is to be able to retire early. The earlier, the better. And when I say retire, really, I just mean to be work optional. My wife also has her own IRA and her own 401k, but these ones are just my accounts. Right now, she puts, I think, $100 per check into her IRA. She doesn't max it out right now. And then her 401k is also 10%. And we work at the same company, so she also gets an extra 10% match. She's putting 20% into hers. I'm putting 25% total into mine. And we're just gonna let those continue to grow. We also have an HSA that we just started this year, and we plan on putting $4,000 into that. It's gonna be a very similar split to my 401k, so I'll probably have something like 70% in an S&P 500 fund and 30% in a growth fund. I'm gonna keep that very simple. I really don't want to touch that at all. That's mainly just to grow and build as much as possible so that once we get older and we need medical bills paid for, that can cover it completely, so we have basically free healthcare. So that's the goal with the HSA. So those are all of the investment accounts that I personally have right now. I'm always learning more about investing, and I'm always trying to become a better investor. And so I think these things are going to change over time, and I'm happy to show you if you're interested in that. So let me know in the comments below if you like videos like this where I'm kind of breaking down every single position that I have and being fully transparent with the investments that I have and how much I have in them. But that's all I have for you today. Thank you so much for watching. Make sure to like this video, hit subscribe if you are not subscribed already. Check out this video coming up next, and I will see you in the next one. Peace.